Welcome to the Excellence in Enterprise podcast, where I reach out to people I do not know, engage with friends, all for the purpose of learning about them, learning about what they care about, why they care about what they're doing, what they're engaged with from across multiple different industries and multiple different vantage points and viewpoints, all for the purpose of increasing my personal knowledge and kind of thinking outside the box when it comes to my work, my professional career. I want to draw from those sources, and I thought you might be interested in hearing as well. So I hope you will join me on this journey. You can find me on YouTube, on Spotify, on Instagram, and on Twitter. Feel free to reach out anytime. I'd love to engage with you. And I hope you enjoy this podcast interview engagement journey with me. Welcome back to another episode of Excellence in Enterprise podcast. This episode is a special episode because it's my first double-digit episode. It's episode number 10, and it's with Silvia Manent. And a couple of the key takeaways that I had from this episode were, one is how her career kind of shifted and changed over time. It wasn't something that she was, finance was not what she was originally pursuing. And then second, I really enjoyed and appreciated her very vivacious and strong energy. It was fun talking with her. And then third, it was cool to kind of get to chat with someone who had some different perspectives on women in the workforce, and then also how being a woman in the kind of financial environment, some of the strategies and pieces that she's been taking into consideration in how she kind of presents herself and her work. And so very interesting. I thoroughly enjoyed the conversation, and I hope that you do as well. Let's get into the episode. At the beginning, I want to go back because, I've looked at a little bit of your background, and I've followed you on Instagram for a little while. I can't even remember how I found you. I don't know if you commented on something, if I came across a random reel, I have no clue. But somehow I found you on Instagram, I think it was, and that's what, made me interested in reaching out. So I wanted to go back, and because from what I could tell, it seems like you've had a bit of kind of a slow journey, not slow, but a slowly growing journey towards kind of the financial piece of things. So I wanted to go back. What did you study kind of like, and it looked like you went to two different colleges to get your degree. So like, what did you initially plan on studying, and then why did you switch?
Yeah, so that's really good proof point. So it all started out I originally went to college in Spain. So right after high school, I'm originally from Spain. You can probably tell from my accent, but we moved back to from the US, and I moved back to Spain to do college there. So I went to ESADE, and during college I studied like business, and then I did my master's in like finance. So the college was the same one, and then undergrad. And right after that, I went to work for Credit Suisse with the rich Mexicans. So in Switzerland, right? Imagine working in Switzerland, in Zurich, and basically your clients have a minimum net worth of $50 million. And what you're doing is pretty much just spending $10 million here, $15 million there. Here's $1 million so you can buy your Ferrari. It was like literally like that. It was like in the movie.
How did you get that? How did you get that? And for the record, my only reference to Zurich, Switzerland is from the Bourne series, Jason Bourne series.
Yeah.
but how did you get that job? Like, how did you go from college student to working at, with these high net worth individuals?
Yes. So great point. So what happened was, I knew a guy at Credit Suisse in Boston, Gordon Greer and Jose, who are two friends of mine. And they were a lot older, and I was like, you know what? I'm an intern. I want to work for you guys. You guys are so smart. They were like in their 50s, 60s. I want to learn from you. You're like my dream. So they took my resume. Somehow it ended up in headquarters in Zurich. And all of a sudden, my former boss calls me. He goes, "Hey, we've got your resume. We're here in Zurich, Switzerland." And I was like, "What?" I sent it over to Boston. I was expecting to get an intern. So I was like, you know what? I heard horrible things about the Swiss, saying that they're very strict. It's a very boring city. It's horrible. But I was like, I'll give it a shot. It's going to be a summer. I'm going to do an internship there. I'll give it a shot. but I had very low expectations of Zurich. I had heard it was beautiful, but I had heard that the people were very strict, very boring, nothing to do. And I went that one summer, and I fell in love with it. I mean, it's the best place in the world, like hands down. I'm trying to figure out how I can bring back my company and still be a U.S. citizen and live in Switzerland. I don't know. I'll have to talk to my tax advisor about that. But I loved it. I mean, I absolutely loved it so much. And it ended up that because I spoke Spanish, they were like, "We'll just put you in the Mexico team. It's the best team."
Okay.
And that's how it all kind of just started. So I was an assistant to a financial advisor there.
So you didn't really, I guess the question, my other question would be, did you have an idea of what you were trying to do? Or was it kind of one of those where kind of opportunities sort of developed in front of you and that's how you ended up there? Like, did you have an idea you wanted to work in finance, or is that just kind of the job you ended up getting through the internship?
Great point. So, and this is kind of where I'm skipping around, but originally I had wanted to go into marketing, right? I was applying to marketing was what I understood. I wanted to I was applying to beer companies. I never drank a beer. And I was like, and so I remember, I think it was Estrella Damm, which is basically like the Coors Light or Heineken of Spain, right? It's a big company. Everyone wants to work for them. And I had an interview with them, and they were like, "Why do you want to work in marketing? Why do you want to work for our company?" And I was like, honestly, I don't really know. Like, I thought to myself, I'm like, I'm here because it's just what it is, right? You go into marketing, consulting, or finance. That was what it was. And I ended up going into marketing and working for a biotech company because my father was in biotech, my sister was in biotech, so I got an internship at a competitor, and I ended up really liking it. But what happened that summer, I was in San Francisco working for this biotech firm. And all of a sudden, I got to meet all these people that were working in Silicon Valley in technology. And it brought up the whole like finance space to that point. I was like, wow, this is super interesting. I would really love to do something like invest in companies and invest in people that are a lot smarter than me, right? Because one thing that I knew was that when I was 6 years old, I realized that I was not very smart and that I would have to surround myself with very smart people. And so that was a good like learning point. So that's how I got into finance, actually, just because of all of that thing.
Gotcha. So you studied in Barcelona, and then you went to work for the company in San Francisco, the biotech company, and then you went to Credit Suisse after that.
Yes. Well, I did an internship at JP Morgan right after the biotech company. It was just a quick little summer internship. Really enjoyed it too. But at that point, I believe that what had happened was I was at JP Morgan. It was fine. Somehow I got an internship at Credit Suisse a year later because I was like, it was, when you're like a freshman, you have to get all these internships. So I got an internship and just ended up falling in love with Switzerland. And that's why I ended up working for the Swiss bank. So it was incredible. Like the whole thing that there's a great book that I highly recommend. It's called Geeks Who Can Schmooze, right?
Okay.
And it's all about a Credit Suisse private banker in Zurich, Switzerland, and what it was like to work with these super ultra high net worth people. And like, it was crazy, right? I remember a client called me and they're like, we just bought some gold, like real physical gold. And I had to open the underground basement and the lock and the safe and like crazy. So
that's awesome. Okay. Yeah. So then how did you end up back in the US?
So I ended up back in the US. So long story short, I did my internship in Zurich for 3 months, ended up getting a full-time job, ended up taking that job that following summer after I graduated. And I was there for about 2 years or so at Credit Suisse. And I really loved, I honestly have an amazing coworkers. And I remember the thing was that I knew I wanted to have my own company. Like ever since I was 9 years old, I read Rich Dad Poor Dad. And I was like, right, like it was the book where I was like, I had to have my own company. So I've always, everything that I've done since the age of 9 has been strategic, right? I was always like, oh yeah, long-term forever. Inside, I knew I was not going to be there.
Mm-hmm.
And so the reason why I left was because Switzerland and Credit Suisse and Zurich is a great place to start to like learn and internships. But in terms of like really building a business and the whole meritocracy that you have here in the United States doesn't exist. Like if you want to get ahead, it's about the time that you're there versus the accomplishments that you did.
Yep.
And I also wasn't getting as much client exposure as I wanted.
Mm-hmm.
So ended up coming back and working for Morgan Stanley in Boston. And there I had so much client exposure, right? Like financial advisors were like, yes, we have a Hispanic blonde and who's petite, like amazing, everything that we need, right? Because it looks good for the numbers, right?
Yep.
Like for the minor, like it was great, right? I was like minority, I had like the CFA, like it just looked good. So all these advisors had me like, hey, come with me. So that's how I ended up coming back because I just had like a lot of the client exposure. I feel like I'm saying things that may be inappropriate, but
No, you're good. No. So I think it's important, and this is just my opinion, of course.
Yeah.
But it's my opinion that one of the ways to learn from people is for them to be genuine, right?
Yeah.
And it's one of the ways for other people to understand, kind of how the world works, right? And that's why people listen to podcasts. That's why people read books and watch movies, is they want to understand things. And like, if you're not talking about it, then people can't understand. So I did want to ask you if that environment bothered you and like personally, and then is that like, or were you just willing to put up with it because you had your own goals? Like, how did you, what were you wrestling with within that environment, given obviously the various pros and cons?
Oh my God, that's a great point. So when I was in Switzerland, I remember I was working on this presentation for a client, and the client knew me because I was basically I was like the assistant of a financial advisor, and they knew me. They were really excited to meet. And that following morning, when it was time to present the presentation, my boss came to me or my financial advisor, like boss, came to me and was like, you're not going to be presenting. I don't want you in the meeting. Because I think he had like, my personality really came across that it's not serious. Like I can be, because I'm laid back and I try to like make jokes, like it can actually be a negative connotation, right? And so my boss didn't like it. So he never like brought me in, and that really bothered me. Like that really, really affected me. Because on the one hand, I was like, I totally understand. You have to be like, you're dealing with people's money. This is not like a joke. But at the same time, I also never wanted to be something that I wasn't. So it was definitely something that I wrestled with. And I think that was definitely one thing like that drop that said, I'm not going to be here forever. Like this, I'm going to leave sooner because I'm not going to get anywhere like with people like that. Right.
Yeah.
And it's funny, coming to the US, it was completely different. Like advisors loved it that I was just like more laid back. It was a very good, especially because it was mostly older men. So having like a younger woman bring in and just have something a little bit more laid back was very, like I see like as a positive thing, but it wasn't seen that way where I came from in Zurich. So
gotcha. So even though it wasn't maybe as preferable to you personally as a woman in this environment, it still felt, or it was more easily enjoyable than kind of where you were coming from. Is that fair?
Yeah. So I'm gonna be honest. I really do think that like coming to Boston, like I've never experienced like being a woman. You hear all these things. Being a woman is a disadvantage. Being a Hispanic is a disadvantage. Being heightism and lookism and like all these things, right? There's like crazy things, but I never felt that way at all. I actually saw it was a huge advantage. I actually even thought that I was taking away a lot of the men that were probably even better than I was, but I had gotten the position because I was a woman. And I think it felt a little like it kind of felt guilty because I believe that you should get ahead because of who you are. Like if a white male is better than me, he should be in the position. Like you shouldn't just hire me because I'm a woman and you need to meet your quotas. Like I've always really believed in that, but I do understand that, some people disagree with me. So
no, that's okay. It's what makes the world go around. Okay. But that's also good to know. And it's good to hear that you, at least due to your perspective, at least were able to have a positive experience. So that's awesome.
Yeah.
Okay. So you were at Morgan Stanley. And then about a year and a half ago, you started your own Manent Capital.
Yeah.
And so you're doing your own business. So my question, I want to get into your thoughts and perspectives on kind of markets and investment and all that, because I would love to talk about that.
I love it.
I want to know and talk a little bit more about your business. So, and not just what do you do? I want to hear that to begin with, but then I also want to hear your perspectives on how you're growing it and you're marketing it. I know you mentioned working with a marketing team. I want to know all that stuff because I love business stuff, and those are the things that I love. So I want to get into that. But to start us off, what does Manent Capital do?
Yes. So Manent Capital, we're a registered investment advisor in Massachusetts, where we manage money mostly for, I would say, like the not super high net worth, but high net worth individuals. And then from one pillar, right, it's where I'm managing the money. And, on days like last year, managing money was tough during COVID, right? Imagine starting a business and many of your clients, like the market drops 30%. That was tough. But they ended up, nobody has left me yet, knock on wood. So so far I have a 100% client retention. That's on the one pillar. And then a new pillar that I actually started this year, and that's one of the reasons I've been more active on social media and Instagram, was to do the whole online course thing. So now I have, for the people that either don't have money that they want me to manage, because I get it, you don't want someone you just met managing your money, or for people that want to do it themselves, to really just teach them the principles to be able to do it themselves. So originally it started out with, I created this course program. It's very it's kind of like a done with you, where we give you the material and then we have weekly calls to check in, make sure you're on the right track. So I just created that for more of the people that, as like a stepping stone to my managed money clients.
Gotcha. Okay.
And that's how we met, right? Through probably a reel that I have made.
Something
those
like
are
that.
all.
Nice. Okay. So you're also working with a marketing team or company. What was your thought process behind, trying to find one and work with one versus doing your own thing? And I assume you would do it again, but what are maybe some of the main takeaways or things that you're like, hey, this has really helped in X, Y, and Z?
Yes. So I actually I'm working with, I have an assistant that I work with, and she basically does all my posting. She'll post like my reels and she'll do the captions and things like that. That's on the one side. But I did, because social media has become, specifically after COVID, but it's really become a pay to play. I've decided to start doing paid advertising just to really ignite the power of social media, but to levels, right? And so I really think that I spent, all of this year and last year refining my message to attract that younger generation. And so I didn't want to start with running advertisements to, a website or a funnel or some sort of product that didn't have the messaging down, right? Because 7 times out of 10, if someone doesn't buy your product or your service, it's because it's a messaging issue, right? It's not because the advertising was bad. Like, a lot of the times that's just a vehicle. So I wanted help with that. And I literally just started. I started about this morning. I had a call with one of my agency that I met through a networking group for women. And we're going to start running ads to try to get more data, right? Because here's the thing. I've always wanted to do things organically. I was like, organic, I'm just going to start posting. And at the end of the day, yes, that maybe have worked 4 years ago when there wasn't much competition. But honestly, it's just going to be such a long game of hustle. And I'm at that point where I've realized that if I want to be a $10 million company, 1 million, that's my first milestone, $1 million company.
Yes.
You have to start outsource or you have to start paying for your time. And the reason why, and so I was like, you know what, I'm going to pay for data. I'm going to pay for advertising and things like that to at least get data through my website, through my products, to see what is working and what doesn't. So far, really, really good, because I started running Facebook advertising, And what I've noticed is that like my advertisements were really good. My landing page for basically what I've done, just like a quick overview, I've created a funnel, right? So a funnel, for those that are listening that don't really know, it's basically like a mini website, but it's a way for a client to go through a customer journey without having like step by step, right? So the first step is they see my ad. The second step is they go to like a landing page where I invite them to a free training. So because I noticed I started doing free trainings last year during COVID, like live, and I got a lot of clients from them. So I'm like, okay, this is how it's working. You know, people, I'm decent at video. So I'm going to try to like leverage that. So basically they go to a training and then they are invited to either book a call with me or to, you know, buy my product, buy my course. And so what I noticed through running advertising is that my messaging was clear, but my webinar, the beginning was very boring and people were dropping off. Okay. So I wouldn't have gotten that data if I hadn't run advertising, or if I had done it slowly through a freaking organic funnel. It would have taken, you know, years. And with, you know, Facebook, I spent $400 and I probably spent a little bit more than I should have, but I at least got that data saying, this is wrong, pause it, fix it, and let's redo it. So
gotcha. Okay. That's an awesome perspective. Very cool.
Yeah.
That definitely makes sense. Okay.
Yeah.
And so I was curious how did you get your initial clients, and then how has that kind of client acquisition process gone over the last year and a half? Obviously one of the most important things of any business.
Absolutely. And the way client acquisition has been, it's been very organic. So when I first started, I started my business in February. I did have some clients that came over with me. So that was good. So I kind of have like a base. But for new clients, I just started doing, during COVID, it was a perfect time to be doing webinars about the stock market and what was going on. And people just were so panicked. They would come to any webinar. They had nothing better to do. They were depressed. So they would come to my webinars. And I actually was really interesting. Even if like 10 people were there, I would always get like 1 or 2 calls from those. Or like from like, hey, I saw you on a webinar, maybe like 2 weeks later, and they would contact me. Okay. So that was one way I was doing. Like I did a webinar for Massachusetts General Hospital. So I got some doctor clients from there. I did a webinar for my alumni school. So my school has an alumni group. So I got a foreign South American client from there. And I did another one for like freelancers from another group. And I got some like new business owners from there. It was all about me just providing like a training course of pure value. I wasn't even like, I know psychologically now there's all these psychological ways to do webinars, right? Like imagine and boom, boom, boom. I didn't do any of that. I was just like, here's pure, like, this is what's happening. This is my opinion. This is what you should do. Bye-bye. And then I would get a contact, probably not right away, but 2 weeks later, being like, hey, we have a financial advisor. We're not happy. Can you take a look? And that's how it started.
Gotcha. Okay.
Very organic though. Yeah.
Okay. Well, but it sounds like you were taking a lot of initiative to kind of get the ball rolling and to make those webinars happen and all that. Were you doing that essentially by yourself, or were you working with a team or with an assistant?
No,
was that just you?
It was just me. I would get invited. So what would happen was they're like, we need a speaker to speak at our event. And then someone else was like, Silvia, why don't you speak to us? Because it was COVID. The market was crashing. People were really scared and they were willing to listen to anyone that had an opinion. And it was a really good time for me to be in that market, because when the stock market goes up, everyone thinks they don't need a financial advisor. I remember like everyone thinks they can do it themselves. But when there's a crash, like when your $50 million becomes $20 million and you don't know what's going to happen, you listen to anyone. You want to hear other people's opinions because of that. So I didn't do it on purpose. People would reach out to me being like, hey, Silvia, like want to do a speaker, whatever. And I was really scared because it was kind of like my first time doing it. But I loved it, right? Because the people that come to webinars are people that are really going to want to learn. It wasn't like with seminars where you put in a seminar and 50% of the people that come, they just want the free food, right? Like, So that's what I loved about webinars, is that like I didn't have to give food to anyone, and I could speak for, 30, 40 minutes and then have questions. So that was great.
Gotcha. Okay. So then who is your target audience, and why are they your target audience? Because obviously in terms of people with net worth, right, there's,
Yeah.
tens of thousands of them. And so, and then I'm curious about that answer. And then I'm curious how you tie that into your kind of marketing efforts through Instagram and things like that. Cause obviously most people on Instagram are probably not high worth individuals. So I'm curious, how you see the connection there, but
Yeah,
go ahead.
and great point. And so my target client is that 100 to $500,000. I've mostly, it's been designers, like engineers and like not
Okay.
creative designers, but like UX designers.
Yep.
Actually, one of my clients, she designed like she was on the team that designed like the Bumble platform, which is freaking
Nice.
awesome, right? Like I have some cool clients. And then I also have some like doctors. It's mostly like I started with only helping or like targeting women, but I quickly noticed that a lot of men needed help. And the thing that I've noticed specifically this year is that specifically men were kind of they came from a place where they knew they kind of, it was like a pride, right? Like you should know this. You're watching all your friends trading stocks on Robinhood, and you kind of ask for help for your coworker, but then you don't really know what to do. So I started getting like men through that, because they were kind of like, okay, I feel like I need someone to tell me what to do without the get rich quick schemes.
Okay.
And so I've been attracting, which is the people that I really like to work with, is really that high quality, either physicians or, types of designers, like young professionals, I would say, young professionals in their early 30s to 40s,
Okay.
that are just confused, and they kind of just like they need help, and feel really like embarrassed to admit it, that they don't really know what they're doing. Those
Sure.
are really much the people. And it's hard to get a man to tell you that he doesn't know what he's doing. But but yeah, but it's fun. It's people that feel like they're in the dark with their investments, which so I started at helping women, and then I quickly realized that I really like helping men too, maybe even more than women, to be honest, because they're just fun to work with, and I feel like I can really help them because they don't have that many women that can understand like how they are. And specifically when you're a man, you have like a lot of, if you have a wife and kids, you have a lot of responsibility, right? Like, and you can't really go to anyone to talk about that stuff. I don't know, Britton, how it is for you.
It's just me, myself, and I so far.
Is it Jacob or Britton? Like, what's your first name?
Britton, and then my last name is Jacobson.
Jacobson. Okay, good. I said it right. I was like, I know it's Britton, but yeah, I don't know. And maybe you can relate to this. A lot of the times, women, we have support networks and we have support groups, but men, you guys don't really have that, right? Like when you have a problem, you have to take it on yourself. You can't really go to people to talk about it.
That's a super interesting perspective. It's something I've certainly thought about in the, like within kind of corporate culture, at least in American corporate culture, is we're far more likely to have a mother support group. Like there's no really such thing as a parent support group, and like they might call, or a father support group, they might call it a parent support group or whatever, but it's mostly the moms that'll go. And so and I've noticed that, like you mentioned a networking event for women, and I was like, I can't think of any networking events that are for men. It's just like a networking event that probably have more men, or something along those lines. And I feel like, and again, I could be wrong, but I feel like most of the time, if you're branding it as for men or for white men or for whatever, right, it's like this, like you can't believe you're blocking these other people out.
Exactly. Yep.
And so, and obviously you can get carried away with being too strict and like not having an open mind, and there's plenty of smart people of every shade and everything else, but I understand what you're saying, and that's super interesting. Okay, all right, so when I think the other thing that I want to understand about your business and what you're doing is how does the fee structure work, right? So obviously there's the course side, which I assume that's more of like a paid course, kind of one and done sort of thing. But if like someone's working with you as their advisor, how does that, let me, for those people, so that people can be educated here, and you can fill us all in. How does it normally work, right? If I'm, I've got some sort of normal advisor I found on Google or, through my bank. So how does that work? And then what's the difference between that and what you do? And how does that kind of play out?
So it's very similar, and great question and great point. Usually the way at a traditional bank, right? You go and you have an advisor and you give him like $1 million and they'll charge you about 1% of that $1 million. So they'll charge you $10,000 per year for them to manage your money. And to be honest, that I feel like that's a good business model because you kind of have like the same interest as that person. Another way that financial advisors would make money is through commission. They would sell you products, specific products, and then you would pay a fee. And that I'm against, because you're probably going to, sell the most expensive product, the one that pays you the highest commission. So I never liked that. And then the third option is through financial planning. So you would charge a one-time financial planning fee of like, $2,500 to $5,000 or so. And which is kind of like for someone to do a financial plan, and then you can either implement it yourself or you can go to someone and they can implement it for you. So that's kind of like the traditional model. Now, my way of, when I first started, I wanted to keep it super simple. And a lot of my clients already were in that like assets under management model where you just charge a fee. So I just took that. I took the same fee. I charge them whatever money they have, and I charge them a percentage, right? Now, of course, my biggest clients, they'll have a smaller percentage.
Sure. Yep.
So that they, there's incentive to bring more assets to me for me to manage. And also because sometimes like I couldn't charge, a $50 million client, 1%, that's $500,000. And I just think that's way too excessive personally.
Well, also, I feel like the other piece, not to speak for you, but I feel like the other piece of it, it's a similar amount of time and effort that you have to put into managing $1,000 versus managing $10,000 or $1 million.
Maybe even more time, because I'm going to tell you something. One thing that I did notice during COVID, a lot of my smaller clients, because it's everything that you have, you're going to panic more, right? Like, and so it tends to be that where I found a lot of the times the smaller clients is actually even more work than the bigger clients. But yeah, like you said, it's about the same. It's the same work. Okay. And so, so I kind of did that. And then with my course, I set up like a one-time fee, and then they do have the opportunity to keep working with me it's more of like a group setting because it's like lower fee. So
gotcha.
On like a group with weekly, basically what we do is on Tuesdays, we have weekly coaching, and they'll come together and they'll ask questions. And it's really cool because you get to see different perspectives of people, right? Like, one's like someone, maybe she's like someone is working at a hospital. Another person is working for the government. Another person is like, so we have very different, it's all basically people that are young professionals, very driven, that want to get ahead of this before it's too late, but that are like those. And so and that's like a monthly fee going, you get 2 months for free once you start, but then if you want to continue, you have the option to continue.
Okay. So it's a paid community to some extent or another.
Correct. Exactly. Okay. And I try to I've always tried to bring innovative things to my business model, instead of like the typical AUM thing, just because I like the whole membership model, of course. And I wanted to bring that over. So
no, it's super interesting. One of the thoughts that I've had in observing your content and, checking out your website and your reels and stuff like that is, and maybe tell me what you think of this, but it feels like you've been trying to apply, millennial or, Gen Z, Gen Y, et cetera, like marketing techniques to kind of traditional finance, planning essentially. Is that fair?
Yeah. Totally.
Okay.
Yes. Because it's not attractive. Actually, a lot of my clients, they came to me because they were like, I found you through the CFP website, and I interviewed a couple of advisors, and I felt like I didn't understand what they were saying. I didn't resonate with them. And I just felt like you had, like, I liked you and you're a woman and blah, blah, blah. And so like, that's one of the reasons I think they came to me, was because it can be very, if you're new to this whole finance space, it's really overwhelming and scary already. Not to mention for someone to pick you up in a mahogany office and you're like, what's this going to cost me? You're looking around like, this is very, so yes, that is totally correct.
Okay. And you mentioned one of the points I was curious about is, how are you getting over the hurdle of people our age, right? The younger generation who've been exposed to the Robinhood, who've been exposed to cryptocurrency, who've been exposed to like all of these, quick, fast interacting with the market jazz, right? How do you interact with them and help them appreciate, index funds tend to be at least easier, but how do you help them appreciate things like bonds, things like, treasury notes, things like that? How do you get them to understand and appreciate that versus just saying, hey, go manage my money, but I really want it in, ARK Invest or something like that?
I know, exactly. Which it has happened, right? It has happened to me where some clients were like, this bond thing is not going to do it. And we've been out of bonds for the past couple of years just because it was just a higher risk for us to be in bonds than to be in either cash or in like, much more mature and low octane companies. Yep. So we've actually been out of bonds just because of the low interest rate environment. Like, it's just been a bigger risk for clients to be in that. And they haven't been, you can't meet your financial goals that way. However, it's a great point. I actually had a client who was in his 70s who was like, just buy ARK Invest, just buy Tesla, just buy Zscaler, right? And I'm like, okay, like, you're very successful and you can withstand the volatility, but you're only happy when things go up. And I always tell people that it's very easy to get overly, like, most people that have come to me now have been because they've been burnt out by the ARK Invest stocks and by these high octane stocks. Okay. And by the Robinhoods, because right, they kind of started playing around with Robinhood. They were making money. It was going great. They thought they were on top of the world. And all of a sudden the stocks, all the technology stocks basically corrected.
Tanked.
They tanked, right? Like, they tanked. And then they're like, Silvia, I need help. I don't know what I'm doing. And so when I explained to them, it's so funny because this is exactly what happened. I started explaining about the index funds, right? Like, a lot of them are not, like, you think it's common sense. Most people don't even know that this exists. Like that like ETF, I mean, they've heard maybe of ETFs, but it's not a big thing and so I showed them like the VOO, right? Just like a regular ETF. And I was like, wow, you've got Amazon and Facebook and Google, like you have a lot of the companies that you really like. And they were like, oh, wow, this is amazing. So like, these are exactly the companies I want to buy too. And I'm like, yeah, and you've got this, and then you have a little bit of everything. So I think it's been for them like a relief to know that you don't have to be like on Reddit looking at what's going to be the next stock. You can actually just buy one index fund and actually be smart about it, right? Because I think from our perspective is that if you don't come from the finance space, you think that the more uncomplicated and crazy investing strategies are going to be the most successful, but data shows otherwise. And so it's showing them the numbers, right? I'm all about data. I'm not a woo-woo person at all, right? I think that's maybe why I get along with men, because I'm very direct. I'm not at all, but I show them the data. I'm like, listen, if day trading stocks was going to work and it was shown to work, I would tell you to day trade. I'm going to show you the data and I'm going to tell you what works. And I play a lot with the emotions, right? Like, I try to make them aware of how we can be our own worst enemy. And I think that has been very, very eye-opening for a lot of these clients. And literally just right before this, I have a client who's in Dubai, and he's like, Silvia, I'm looking at brokerage accounts. Which one should I open? And he told me one, and I opened the app. I'm like, this looks like a freaking slot machine casino. You're staying away from that. And he was like, yeah, I don't like that. So I think the people that are coming to me are the people that are scared of the whole Robinhood casino thing. They're like, okay, I don't know what and there's a lot of people that way.
Yeah. Yeah. Well, I mean, they certainly haven't been helping themselves recently.
Yeah. Do you use Robinhood?
I did like for the last couple years, but
Yeah.
I haven't. I didn't really have much in there because I just bought my my condo last year, and
Yeah.
so like I liquidated my Robinhood stuff for that, and
Yeah.
then I haven't like gotten back in since the whole deal. I did get like 4 or 5 of the other apps and accounts just to see what they all work like. What's Sophie like? What's Public like? What's
Yeah.
and I tend not to enjoy them too much. I think the thing that makes it a little annoying, one, I do appreciate the fractional investing part. That's nice.
Yeah.
But in general, it's annoying because I want to be able to manage kind of like everything in one place. And like often it'll be like, this has this perk, this has that perk most of the time. And none of them, this is I guess the biggest unfortunate part is none of them have the nice user interface that Robinhood does.
That's exactly right.
And I don't understand that. It's like, how hard is it to just make a nice user interface for something that someone already did? Like you just have to copy it, like
So
I don't
true.
understand that. But
That's
so yeah,
exact. That's a conversation I had with a client. I was like, he's like, I was telling them about Robinhood and how they were making their money off of inflating a lot of the prices. And he was like, yeah, but the interface is so beautiful. And I'm like, I get it. I use Schwab. The interface is horrible, like absolutely horrible, but they make it up with their customer service, right? And I get it
nice.
too, but these companies are so old and it's so hard to just like I can't, yeah.
Yeah.
Which is why Robin has been so successful. Like, if you make things simple, people will get attracted to it.
Yeah. No, I a lot of the older people, the older institutions want to attack Robinhood or I think want to attack them with, they're gamifying it, this, that, and the other thing. And they are, but like, that's mostly just to get people to, open the app. The reason people use the app is
Yeah.
because it's super easy and simple and
Yeah.
it makes sense. And so like,
And it's beautiful. I'm going to admit it. I'm not a Robinhood fan. And I've said it before why I don't, I want people to disclose their business practice, but they have a beautiful interface. I have to give it to them. And they've
yeah,
done a really great job from like a marketing perspective.
yeah, absolutely. Okay. All right. So let's talk about kind of the current environment and your thoughts.
Oh my God, current environment. I know.
So
So
I think the first question I want to ask within this is, what are the things that you pay attention to on a daily basis or weekly basis? So for some people, they're staring at AMC stock all day today, right? Are you staring at AMC stock, or what are the things that you're staring at most of the time?
Oh my God, great question. No, I'm not staring at AMC stock at all. I look at themes, right? I look at the big picture. Most of my clients, we restructured a lot of portfolios last year to really position ourselves into this new era, the new, the digital innovation era, where
Okay.
I really do believe, I'm a big fan of Kathy Wood of ARK Invest, right? So I do believe that it's the companies that invest in their R&D, invest in their products and in their companies instead of paying out in dividends. I think those are the companies that are going to make it. Yes, now technology is totally out of, we've been in a correction and it was healthy, very healthy correction. But in general, I'm still that's really my investment philosophy is you need to understand where we're heading. However, in the way that I'm a little bit different than Kathy Wood is that I still want to see profits, even if the company is investing, right? So what I don't want to see, I love companies like, for example, Trade Desk, and just for compliance, anything that I talk about is not a recommendation to buy and sell. I have to just say that quickly.
Not investment advice.
Exactly. But like, for example, Trade Desk is a company that we used to own. And I think it got a little bit ahead of itself because but it was a company that is still growing. It's in the digital advertising space, which let me tell you, that is only going to go up, I think, in my opinion. And they're profitable, right? So it is possible to be profitable and still invest and still grow in a very like well-sustained way. So that's a little bit of my kind of big picture investment philosophy. I think Kathy Wood is very smart. I do think though that obviously ARK, it's been 10% Tesla, and Tesla has been driven by the Robinhood. So I am a little bit like, that's one of the things where I'm like a little bit iffy about. But in general, I'm always looking about what is coming. Like something that's really interesting to me is where like I'm always looking at the next big trend, right? So I don't know if privacy is becoming a big deal. a big deal. I don't know if you saw with the iOS updates where Facebook now asks you, can you want this person to track you, blah, blah, blah. So
And
privacy,
90% of people are saying no.
I was saying no. I totally, yeah, absolutely. I've even heard something like only 4% have opted in.
Yeah.
Exactly, like crazy, right? And so we're going to a place where it was completely unsustainable for someone to be able to have so much data about you, and now all of a sudden you're able to. We're going back in time a little bit with that, and so privacy is like a really big theme that I'm looking at, right? Privacy, cybersecurity, anything that has to deal with protection of the consumer. That's kind of where we're heading. And so when I look at companies and when I'm looking to invest, I'm always positioning it like it's at the end of the day, it's kind of common sense, like what is happening, right? Another thing we were talking about earlier, audio, right? Audio, you're looking at Spotify, you're looking at Amazon, all these, I think Facebook is going to buy Clubhouse personally. Like audio is going to be really the future because we've seen that people don't have the attention span to sit and do nothing for an hour and watch a video. Whereas, yes, they can, drive a car and cook dinner and listen to a podcast like this. Like really, I think podcasting is going to be bigger than it's ever been. And so when you're looking at companies that way, you also like who is investing in these types of things and types of markets, not just like AI, like everyone is saying.
Yeah, it's kind of the next generational media content. There's been a lot of talk about that in the space.
Yeah, and I don't buy old energy companies. I still don't. And the reason why I don't do that is because you can already, a lot of these companies, you need to be well diversified, but that doesn't mean you have to be an idiot and just blindly. I think index funds are great for people that are starting out. I really do. I think it's better than just blindly trying to buy here and there. But if you're managing money for people, you have a duty to try to, yes, I understand that 85% of portfolio managers underperform. I get it. But we've been done really well because we've just seen where the market is headed and we stay the course. Like, yeah, the market corrected 20% for a lot of these technology stocks, 30%, but we stayed the course. And I think that's where we kind of come in and remove that emotion out of you, which is what's going to make you successful. But yeah. And I'm also looking at inflation. So
that was my next question, or one of my two next questions is, what are your thoughts on inflation? And I'll tell you my thoughts.
I want to hear your thoughts first. By the way, I have like 10 minutes left.
I know. I keep glancing at the clock.
Perfect.
We'll tie it right in. So my quick thoughts are, I don't think it will be as bad as the main people that are concerned about it think. And the reason I think that is, one is I think a lot of it has already, in terms of the money that's already been spent, has already been priced into the stock market, which is why the stock market maintained relatively substantive growth and consistency throughout the pandemic that was screwing everything up. And then second is, I think a lot of the inflation numbers, or substantive percentage of the inflation numbers that we're seeing to date, is caused by supply and demand issues that I think are across the whole entire global supply chain. And then third is, a lot of the money that's been lent has been to the banks, who are not actually lending at the rates that they have been in the past. And so that money that's been spent is not actually in circulation. And I don't think that banks plan on putting it into circulation. And you can see, like, month over month, the number of loans that have been made by banks has been less and less over the last, I think it's 6 months or something like that. And so that's why I don't think it'll be bad. I think there'll still be some, and I think we'll see more. I think it'll, flatten out for a little while, but I don't think it's going to be this, 8%, 10% or something like that.
I totally agree with you. And you bring in a great point about the banking, is that a lot of these banks as well, we've never seen a stronger economy than it's ever been. A lot of these financial banks, they've actually have way more reserves than they expected, because less people have actually defaulted on their loans. And so I really think it's going to be transitory, we're going to see it right now. As soon as people are out, right now, everyone's out about spending money, going crazy. It's normal. It was going to happen. People just woke up and, they're a little bit on a high side. But I do expect in the next year or so things to start stabilizing again, because people are not, they say that wage growth is going to be a little bit stickier and it's going to be harder. Like, I mean, everywhere I go to a Dunkin' Donuts, I go to what have you, everyone's trying to hire. And it's really crucial to see how people are just, the companies, they're competing with unemployment. It's normal to see this sort of inflation. And so.
Yeah. Yep. Yeah. I definitely agree on that. I definitely am curious. One of the things I'm most curious about is what will happen in the job market between the remote work thing, between people having left all kinds of cities and moved to all kinds of other cities, and that whole, migration situation we've had over the last year and a half. I think that that'll have a more permanent impact on what like the next 5 years of so of business and growth is going to look like, or I guess I should say the business environment's going to look like, than maybe necessarily inflation or some of these like more even policy changes and things like that have been discussed. But we'll see.
No, it's a great point. So it's going to be interesting what happens to wages. So
yeah. Okay. Final question so that you can jump. Thoughts on crypto, and do you think about, we could probably do a whole podcast about this.
I know. We should do our next one.
I'm down. Do you think about crypto as a financial tool? Do you look at it as just a distraction period? Or do you look at it more from the kind of the technology web 3.0 standpoint?
I see it as the third one, really more of the blockchain. Obviously, I think blockchain is here to stay. That's definitely not going to go away. I do own a little bit of Bitcoin through GMTC, indirectly through It's a Trust. Yep. And my clients as well. Like, we do own it because I do think there is potential, but the thing is that scares me the most is that it's still not widespread, right? And I think people can say it's the future as many times as they want. But at the end of the day, unless it's actually utilized by most people and most people actually believe it, like, would you trade all your money for Bitcoin?
No.
Like, right? And I think most people aren't. And I think until it becomes a safe currency or safe reserve, until it becomes that safe currency reserve where you're like, yes, let me give you my US dollars, give me Bitcoin. I don't think it's going to be I think it's still going to be a long time, specifically with regulation. I think I'm looking at Bitcoin from like the blockchain technology. What about you?
I agree. The podcast I did before this one was with a software developer, so I could try and understand more about blockchain. We want to do like a second episode talking specifically about the technology on what you can build on it.
Yeah.
Because I think that between regulation and government perspective is like the reason the government hasn't done anything is because A, they're old and they don't understand how it works. and B is because they don't see it as a threat to the dollar. And I think as soon as they do, there will absolutely be regulation, taxation, and all kinds of stuff. And I don't see it being, moved around widespread. And I don't believe that the technology has the capacity through proof of work or proof of service to handle the transaction speed that is necessary. And, again, today, the reason the current financial system works is because it's fake numbers, and then the money kind of follows it 5 days later.
Yeah.
But I don't think that unless you do some version of that on Bitcoin, which is kind of like, what's the point of Bitcoin if you got this fake version anyway, other than the anti-inflationary standpoint and limited, number of coins. I don't really see it being a replacement for that. And I think that that's what you need if you actually want A, mass adoption, and B, for it to be, worth use. But the other thing is, the problem with that is Bitcoin counters its own argument by saying the price is going to go up. So like, if the whole point is for you to buy into it as an asset that's going to increase, like Michael Saylor does through MicroStrategy, right?
Yeah.
Like, if that's the whole concept, then you can't also at the same time on the other side of your mouth say, yeah, we're going to buy and sell and trade in Bitcoin. It's like, no, you don't do it with gold. You're not going to do it with Bitcoin, or you are going to do, you can't do it with Bitcoin anyway. So I feel like they make the one argument in effort to like push mass adoption, but it doesn't actually translate to their actual investment strategy or thinking.
Totally. People are buying Bitcoin simply because it's going up, not because they actually understand the underlying value, which kind of there isn't.
Yeah. No, there's, yeah. Gold only works because there's, however many thousands of years of history supporting it. And the likelihood of Bitcoin just coming in and replacing that is like pretty tiny.
I know.
Not to mention the distraction of 1,000 other coins.
Exactly. Ethereum, Dogecoin.
Yep. Yeah, exactly. So,
Oh.
okay. Well, this was super fun. Thank you so much for coming on. I'm super happy. I loved talking to you. I have, certainly more questions, and we'll have to stay in touch at the very least.
Yeah, well, no, we have to do a part 2. If it does well, if your viewers like it, we can do it.
I'm sure they will. I'm sure they will. Small but strong. We're growing.
I'm going to share it everywhere. So
sounds good. I will tag you and everything, and we'll go from there.
Awesome. Thanks so much, Britton.
All right,
have a nice
care.
rest of your afternoon.
You too. Bye.